Good afternoon, ladies and gentlemen. Welcome to Energy Development Corporation earnings call on its year-to-date 9 months 2015 financial and operating results. I will now turn over the floor to Mr. Ryan Velasco, Senior Manager from Finance. Please go ahead, sir.
Good afternoon, everyone, and welcome to EDC's conference call to discuss its financial and operating results for the period ending September 30, 2015. As a reminder, this year-to-date 9 months 2015 financial and operating results presentation will be posted in the Investor Relations page of the company's website shortly. The audio playback will also be posted to the company's website within 48 hours after the call. With me here now are Mr. Nestor Vasay, our Chief Financial Officer, Mr. Dom Camu, Senior Vice President and Head of Power Plant and Steamfield Operations, Mr. Paul Cerulo, Senior Technical Advisor, Mr. Erwin Avante, our Vice President for Corporate Finance, and Mr. Erudito Recio, Senior Manager and Head of Investor Relations. I will now turn the floor over to Erwin Avante for the discussion of our first 9 months financial and operating results.
Thanks, Ryan. Good afternoon, everyone. I'm looking at slide 5 right now. There are basically 4 major events that transpired during the first 9 months of the year. The first one, Burgos Wind still recorded a net loss of about 0.4 billion as half of its capacity was curtailed. Note though that the upgrading of the San Esteban transmission line, which was the main culprit for the curtailment, has been completed end of September of this year only. So with this, we expect Burgos Wind to have a positive turnaround and actually contribute to our bottom line this year, as we expect to capture the high wind season starting October. The second significant event is something which we already reported in the second quarter earnings call. The unplanned outages on our Tongonan Unit 2 and Bacman Unit 3 power plants have affected our financial performance. Recall that Bacman 3 auto-tripped last March 5 due to a minor lube oil leak, while Tongonan Unit 2 went on unplanned outage early in March due to the turbine blade failure. Both units are now operating normally, returning to service last April 7 and July 7 respectively. Our OPEX has also gone up significantly, mainly due to typhoon-proofing expenses, higher depreciation expenses, and operations and maintenance costs on new projects. The last 2 items are what we consider as non-recurring factors, but they've also significantly affected our reported consolidated net income. Recall that as of 3Q 2014, last year, we've reported the reversal of the impairment amounting to about 2.1 billion following the successful relocation to Nasulo, Southern Negros of the NNGP power plant. So there was no reversal for 2015. Lastly, we recorded a higher forex loss of about 1 billion as a result of the depreciation of the peso against the US dollars. On slide 6, just to give you a big picture of the summary for financial performance for the first 9 months of the year, I'll just try to run you this quickly, as I will have a separate discussion on the major drivers in the succeeding slides. But consolidated revenues increased by about 10% from 23 billion to about 25.3 billion, or roughly 2.3 billion. And this is due to the contributions of the new projects, namely Burgos Wind, Bacman Unit 2, and Nasulo. They've contributed around 1.3 billion, 1.2 billion, and about 0.2 billion respectively. EBITDA increased or was roughly flat for the first 3 quarters of the year because the cash OPEX also increased, which negated the increase in revenue. In summary, cash OPEX increase is due to typhoon related expenses of about 500 million. Cash OPEX of the new projects, including the portion for the ULIPPA strip of about 0.8 billion, and then generally higher O&M and expenses of about 1 billion. So that's why our EBITDA was quite flat, for the first 3 quarters. If you look at the consolidated net income, it was down by about a little over 4 billion. And the major reason behind this are the absence of the reversal of the impairment. In 2015, that's about 2 billion. Depreciation of the Burgos Wind, as well as interest expense on the project financing of about 1 billion. And then forex loss of about 1 billion. So that totals about 4.1 billion all in all. In terms of consolidated recurring net income attributable to equity holders of the parent, it's at 7 billion for 2015. It's down by about 10% as compared to the 7.8 billion recorded last year. As for the details on slide 7, this summarizes the movement in revenues as well as our estimate of the maximum revenue potential. First is that the increase is mainly because of the Burgos Wind adding 1.3 billion. The second one is the 3-unit operation of the Bacman power plant contributing 1.2 billion. And then Nasulo, which operated only in July 2014, this time it contributed full 9 months, for 2015, so that added about 0.2 billion. And then FG Hydro added another 0.1 billion due to the absence of a catch-up adjustment in 2014. Recall that sometime in 2013 there was an adjustment that was asked by the ERC, among some of the power plants, and this was only booked in 2014. So we didn't have that in 2015. But these increases in revenues were offset by lower revenue contributions from Leyte, mainly because of the Tongonan outage, and that reduced the revenues by about 0.5 billion. If you look at the chart to the far right, we estimate our maximum revenue potential to have reached about 26.9 billion, assuming the absence of outages as well as the transmission line issues in Lawag. On slide 8, this shows you the line by line per plant reasons for the increases in revenues. So for Unified Leyte, it increased by about 3%, and the major reason behind this is the ULI PPA strip. Recall that in Leyte, the PPA in Leyte, I think we're only selling at about 320 per kilowatt hour, but because of the strips, we're able to sell at a higher rate, and therefore that increased the average selling price by about 5.4%, so about 330 per kilowatt hour. But this was partly offset by lower sales volume, down by 2.6%, from 2680 to about 2610 gigawatt hours. For the 2 GCGI power plants, Palimpinon and Tongonan, the decrease in revenue was primarily because of lower volume and lower average tariff. The sales volume of Palimpinon decreased by about 5%, as we had to put on preservation mode the 20 megawatt Nasuhi power plant to accommodate the 49.4 megawatt Nasulo power plant. The sales volume of Tongonan also dropped by about 16% due to the unplanned power plant outage, which I just described in the previous slide. Also, average blended tariff for Palimpinon Tongonan decreased by about 4.5% from 5.32 pesos per kilowatt hour to about 5.08 pesos per kilowatt hour as a result of the repricing of the contracts, which started late last year. But if we exclude the trading activities in the spot market, the average decrease in the GCJ prices would have been, about 25 centavos per kilowatt hour, from 5.21 to about 4.97. As for Bacman, revenues increased by 55%, or about 1.2 billion, because of the 3-unit operations. For Mindanao, it's relatively flat, so I'll skip that. FG Hydro, on the other hand, the revenue increased by about 8%, again, because of the absence of the 2013 catch-up entry that was booked only in the first quarter of 2014. Although average volume also increased by about 0.5%, the average blended tariff was down by about 8%, no, from 4.72 per kilowatt hour to 4.34 per kilowatt hour, or translating to about 138 million in lower revenues due to lower average prices sold for ancillary services. Lastly, on the three newly commissioned capacities, Burgos Wind and Solar, as well as Nasulo, they've contributed a total of about 2.4 billion in total. No? Sales volume for Nasulo increased by 137%, no? Because last year we only reported 3 months of operations as compared to 9 months this year. No? Average tariff, meanwhile, decreased by about 6.9 because of lower Western prices. Slide 9 summarizes the movement of the operating expenses for the first 9 months. As you can see, no, OPEX in this case now, which includes depreciation, no, cash and non-cash, increased by about 28% or 2.3 billion. The major contributors are as follows. For Leyte, OPEX increased due to higher expenses related to Typhoon Yolanda and Senyang rehab costs, power plant O&M, and maintenance, now, particularly for Upper Mahiao, Malitbog, and Tongonan power plants, as well as higher cost on steam pipeline system due to maintenance and repairs of pumps and pipelines. No? Another major driver of higher OPEX was increase in depreciation of the PPE, no, or power property, plant, and equipment for Burgos Wind, as well as O&M cost with Vestas. Negros Island OPEX also increased mainly due to Nasulo's depreciation as well as O&M costs. Similarly, no, there's an increase in Bacman due to increased power plant O&M, depreciation, and Typhoon Glenda rehab costs. The UL IPP strip added also 494 million of additional OPEX for the year. On slide 10, in summary, no, as you can see here, this shows you the contributions of the different locations or the different power plants on the recurring net income. So it was down by about 10% or about 0.8 billion. To summarize, no, Bacman and Mindanao here, no, added close to 1 billion and 0.2 billion respectively in the core income. But LGBU, no, mainly because of Tongonan, so that's about a reduction of about 0.5 billion, and higher OPEX, another 0.5 billion, totaling 1 billion for LGBU. Result also to the reduction of the recurring net income. Nigbo's higher expenses was mainly due to Nasulo's higher depreciation and increase in power plant costs for Palimpinon, and civil works as well, no? And ULGEI, the ULIPPA strips, is at a loss, no, of about close to 300 million, no? Which also added to the decrease in RNI. And then as for FG Hydro, there's a slight decrease because of the expiry of the income tax holiday in 2014, sometime April 2014. For the cash flows in slide 11, the net cash generated from operations during the year stood at about 16 billion. Of this, we use about 4.6 billion to service debt, 4.5 billion for maintenance capex for existing operations, and about 2.8 billion was used to pay dividends as well as other input VAT and other items, no. Meanwhile, to the right, no, net proceeds from the final drawdown of the Burgos Wind added about 0.9 billion. And the remaining net cash balance from operations of 4.3 billion was used to fund some of the capex on growth projects, no? Mainly new wells, some civil works for the Chile project, as well as new wells for the growth projects, no? And then if we add the cash balance of about 14 billion, that would give us an ending cash balance of about 15.5 billion. For the ratios, the current ratio improved due to lower current liabilities after we paid off the peso bond last June 2015. Both debt to equity as well as net debt to EBITDA weakened, no? But they're still at manageable levels. But mainly because of higher debt and net debt resulting from the project financing for the Burgos Wind project, which was availed last October of last year. My final slide before I turn you over to our CFO pertains to our FX exposure. A significant portion of our dollar obligation remains exposed to currency fluctuation. As you can see in the upper left chart, no, about 41% of our debt are actually denominated in US dollars. But if you look at the chart to the right, it shows you the principal and interest debt service, no, actual that we need vis-a-vis the dollar-linked revenues. Now, recall that we have under our PPA with government, we have a portion of our revenues are actually indexed to the dollar, so that provides some cover, no. So if you just focus, now we try to summarize this in the chart below. At the parent company level, no, the parent's net monetary dollar liability is about 491 million. We have cash of about $41 million, and then $81 million net amount under cross-currency swaps, plus the dollar-linked revenue of about $107 million now, which leaves us at a net monetary dollar liability position of about 260 million. So in effect, if the peso depreciates by about 1 peso, the net forex impact to us to the bottom line in terms of translation loss is about 260, no? But again, pointing to the upper right chart, in terms of realized FX gain or loss, no? Except for 2021 when the $300 million bond matures, our dollar-linked revenues can cover our debt service, no, requirements that are denominated in US dollars. The team is already looking at various financing initiatives that we, that to further hedge our currency exposure between now until some of these dollar obligations mature. So I'll turn you over to our CFO, Mr. Nestor Vasay, who will be discussing about company updates.
Thank you, Erwin. I'll take you to slide 15, which talks about the historical earnings performance of EDC. Historically, the company's reported revenues, EBITDA, and reported net income have been volatile since it publicly listed in December of 2006 and became majority owned by the Lopez Group through 1st Jan a year later. We've identified the following major events as the ones that have contributed to this volatility. The first one is EDC's predominantly Japanese yen debt stock that hit our bottom line in 2007-2011. The impairment loss that we took on our Northern Negros project that affected our numbers in 2009 to 2011. And the third one, the failed attempts at Bachmann's rehabilitation. The fourth is the damage that we incurred to our facilities due to Typhoon Yolanda. And lastly, the unplanned outages that happened in Tongonan and the Upper Mahia power plants. Slide 16 is talking about the risk factors, the initiatives, and the impact to the company. For the present day, we enumerate 6 different drivers to the volatility of our financial results. Likewise, we have refocused management's attention to immediately address these volatilities. Firstly, 2 of the oldest power plants in our portfolio, namely Tongonan and Palimpinon, have been operating for more than 30 years on a run-to-fail mode. and not on a time-based maintenance mode in keeping with global best practices. As you will see in the succeeding slides, both the Tongonan and Palimpinon plants require substantial capex to improve their overall reliability. As for the rest of our generating assets, majority of these assets are mid-life or having been in operation for 15 to 25 years. And for these plants, the capex requirements are less chunky, given that we still have time to methodically institute much-needed measures to address underlying systemic risks. At the opposite extreme, we have less than 2-year-old plants in our portfolio, namely the almost brand-new 49.4 megawatt Nasulu plant and the recently retrofitted Bachmann Units 1 and 2 and rehabilitated Bachmann Unit 3. Secondly, 3 of our 4 operating project sites are geographically located along the Typhoon Belt. And because of this, EDC continually institutes measures to ensure that our horizontal infrastructures will remain resilient to extreme weather events, as was the case for Typhoon Yolanda. This typhoon is internationally named Haiyan. And collaborating with the OEM of our cooling tower units, SPX Marley of Kansas, we are close to completing the installation of typhoon-resistant cooling tower components in both Leyte and Bachmann. And lastly, we have also done work on our power plant buildings for these buildings to withstand wind speeds in excess of 300 kilometers per hour, as in the conversion of bunker type design of the control room of our power plants. Thirdly, during the first quarter of 2015 earnings call, we discussed the haircut taken in the tariff of Tongonan and Palimpinon plants in exchange for our early renewal of the underlying contracts at extended tenors. To preserve our revenue base, the repricing of our GCGI contracts was imperative, given present-day coal and oil prices, the competing alternatives for geothermal energy. Fourthly, we need to continually drill replacement wells to sustain the output of our geothermal steam fields. For improved drilling performance, we find ourselves today continually testing new drilling technologies for oil and gas drilling. The experience is that we now achieve higher than targeted output for our newly drilled wells, considering that we reached the target depth of program geothermal wells. An added bonus is that we were also able to drill at much improved rates of penetration. Fifth, with lower margins for our uncontracted capacity, EDC will actively pursue FIT-supported RE projects. For our projects, we will access various multilateral financing initiatives with the end in view of mitigating exploration risks or enhancing the returns of our capital-intensive geothermal projects. And last but not the least, we find our geothermal infrastructure prone to landslides, considering that our operations are in mountainous locations of the provinces of Leyte, Albay Sorsogon, Cotabato, and Negros Oriental. We have a proactive landslide strategy in place to ensure the continuous operations of our power generating assets. On slide 17, talks about the Tongonan project retrofit. From among the initiatives discussed in the earlier slide, retrofitting of our aging power plants holds the greatest promise for improved revenue generation. For Tongonan, as of year-to-date 2015, opportunity lost from unplanned outages amounted to 650 million pesos. Similarly, computed payback for Tongonan Rehab Phase 2 is at 2.8 years at an indicative IRR of 19% from improved reliability and upgraded output. Slide 18 is talking about the GCGI contract repricing. To address the pressure from coal plants and other effects of the commodities downturn, we had proactively renegotiated some of our GCGI contracts that are soon expiring. In exchange for a reduction in prices, we have increased the life of our contracts from an average of 4.4 years to about greater than 15 years. As such, although we are taking a short-term margin hit, we deem it important to preserve our market share and protect this revenue base over the next 5 to 10 years. That's basically the last my last slide.
Nora.
Yes, sir. Yes, sir.
Yeah, I think we can now open the floor to questions from among those who have dialed in.
Thank you. The question and answer session will be conducted electronically. If you would like to ask a question, please do so by pressing the star 1 key on your touchtone telephone. If you are using a speakerphone, please be sure your mute function is turned off to allow your signal to reach our equipment. Once again, please press star 1 on your touchtone telephone to ask a question. If you find your question has already been answered, you can remove yourself from the queue by pressing the star 2 on your telephone keypad at any time. We will now pause for a moment to assemble a queue. Our first question comes from the line of Ajay Mirchandani from JP Morgan. Ajay, your line is open. Please go ahead.
Yep, thank you. Thank you, gentlemen, for the time. Two questions from me. One, I just wanted to clarify, you have seen a big leg up in the OPEX for Leyte this year, largely, as you mentioned, on the civil works because of the typhoon. Just wanted to kind of get a sense, can we expect that to normalize down as we move into 2017, or do you expect what we've seen being spent in 2016, we should kind of expect those similar levels into the next year? The second thing was, Mr. Vasai was mentioning about the fact that you have seen better drilling output on the back of recent drilling-related work. I was curious to just double-check, has that translated to effectively more lower annual maintenance capex that you need to spend to maintain the steam supply? Those are my two questions. Thank you.
Yeah, I'll try to answer the first one, and then before I'll ask Mr. Vasai to answer the second one. On the first one, we expect some residual typhoon-related expenses next year, but I think most of it, compared 2015 would be significantly higher compared to 2016. For example, I think for Tongonan, we will be scheduling the replacement of some of the cooling tower fan blades sometime third quarter, if I'm not mistaken, of next year. And again, because we wanted to time it when they will undergo preventive maintenance, But generally, to answer your question, AJ, it's mainly this year with some spillover next year.
Is there any number you can give me, Irwin, just to roughly think about how we should think about the earnings delta into 16 versus 15? Can I expect, because I heard you mention something like 500 million odd in terms of the number on the R&I on a year-on-year basis because of higher OPEX. Can I simply just swing that over, or do you think that's maybe a bit too generous?
Yeah. No, for this year, I think we're budgeting for typhoon-related OPEX of about a little over 1.2 billion, So the 0.5 is just an increase compared to last year, because recall that we've done some works also last year. So for this year, I think the budget is about 1.2 billion. For next year, if you're just talking of Tongonan, then that's probably 200, my best guess estimate.
So you're saying 200 is the total likely capex
for the typhoon-related expenses.
So let me put it this way: just in terms of a reduction in overall OPEX for your typhoon-related expenses year on year, how much of a reduction can I expect as a number? Would it be fair to say 500 million, or you think it could be as high as 1 billion pesos year on year? I'm just trying to get a sense on a potential lower OPEX into 2016 versus 2015.
Sure. I think right now, if we're going to, we're in November now, but if assuming we're able to spend fully the budgeted 1.2 billion for this year, then you're looking close to 1 billion of reduction. But the way we do it, AJ, just for your guidance, is when we've computed the R&I, the core income, we actually excluded those typhoon-related expenses.
Okay, you have excluded.
So you'll see, yeah, for the R&I, yeah. But for net income, obviously, it's there. Yeah. Yep.
Okay, and then for the question related to the potential impact of drilling innovation to CAPEX, I turn the floor over to Mr. Vasai.
Yes. To your question, second question, AJ. as of today, we haven't seen any tangible effect yet on our financials. But there are two things that we expect to see going forward with the implementation of new and better drilling techniques. The first one is we expect a faster drilling for wells, a faster rate of penetration, and secondly, the chances of getting higher outputs is also expected from applying this new drilling technologies.
Okay, perfect. Thank you.
Your next question comes from the line of Jason Pakratin from SFYFP Securities. Jason, your line is open. Please go ahead.
Yeah, hi, thank you. If I'm not mistaken, there was guidance earlier this year of flat earnings for 2015. After the performance of 9 months, do you think that guidance still holds? And is there any outlook for 2016 also? Thank you.
Yeah, for 2015, I think the guidance that we gave, in terms of core income, it will be flat, if not a slight reduction in terms of core income. I think right now we're looking based on the numbers that we're running, we're looking at a slight reduction compared to last year. So last year, I think the core income that we've reported is about 9.2 billion. So this year, based on our projections, we'll probably report slightly lower than that. Again, because of some of the higher OPEX, as well as the opportunity losses on some of the outages of the plants, as well as the curtailment of Burgos. Yep. For next year, we're still doing our budgeting cycle. So at this point, we cannot provide some guidance.
Great, thank you.
Once again, if you would like to ask a question, please press star 1 on your telephone at this time. We will now pause for a moment to assemble a queue. We have another question, and it comes from Isa Fernandez from Deutsche Bank. Isa, your line is open. Please go ahead.
Hi, guys. I noticed that there seems to be an improvement in the volume reported sales for Unified Leyte in 3Q. Could you give some color on this? Meaning, are there plants that have been repaired? Do you expect this to be sustained, or is it merely some sort of catch-up because you over-provisioned in previous quarters?
So, Isa, this is Erwin. I don't have the exact figure for Q3, just for Q3. But I'm looking at the first 3 quarters of the year, and if you look at the first 3 quarters of the year, in terms of volume for Unified Leyte, we were actually down. So from 2680, yes, to 2610. Do we have a figure for that? Just the third quarter. Yeah.
Sorry, because I'm looking at the first half presentation. And as of the first half, volume sales were down 5%, and now they're down just 3%. So if I derive 3Q alone, it seems like 3Q volumes were up we're up slightly year on year, and it's up around 11% Q on Q. So I'm just wondering if there's been some significant improvement in actual sales, or this is just sort of some adjustment because you over-provisioned in previous quarters. Thanks.
I don't think we've over-provisioned in the previous quarter, So if I recall correctly, there are certain Unified Leyte plants that were actually down the first half of this year. So we've been able to contain that in the third quarter. So it's really actual delivery of kilowatt hours, Isa, and it's not related to provisioning.
Okay, thanks. Sorry, if I can just ask a few more questions. I noticed also that volumes from Mindanao, on the other hand, are actually down in the third quarter. Is there also, I guess, some sort of just temporary outage, or are you seeing steam output decline again? And also, with regard to your comment a while ago that typhoon-related OPEX is excluded from recurring income, does this mean that, just to clarify, does this mean that despite the reduction in typhoon-related OPEX this year next year versus this year, you're not expecting any improvement in core income on the back of that? Thanks.
On your question about Mindanao, there was actually a shortfall, no, in terms of steel for Mindanao, but currently we're addressing that. So by next year, hopefully we'll be able to fully catch up, no, as far as Mindanao is concerned. So we see that as a temporary setback. The other question.
Then, Aisa, do you mind repeating your second question related to typhoon-proofing OPEX?
Yeah, sorry, because Erwin mentioned earlier that you exclude typhoon-related OPEX from your RNI. So does this mean that you add back the typhoon-related OPEX when calculating RNI?
Yes, because if you look at the reconciliation of the RNI versus the reported net income, you have there as one of the line items insurance proceeds, no, from typhoon related, no. So what we just try to do is try to offset it because they're of the same category. So we add it back. No?
Okay, thank you.
Your next question comes from the line of Jason Pakratin from SFYFP Securities. Jason, your line is open. Please go ahead.
Hi, just to follow up on the forex translation. With the full year effect, 1 peso resulting in 260 million. What's the exchange rate that's based on?
Yeah, the 260 million net effect to the bottom line is for every 1 peso depreciation. No? So effectively, it's linear. Every time that the peso depreciates, we should expect more or less, no, impact to the net income of about 261. But in terms of accounting, the way it will show, no, is that the 107 million linkage, no, dollar linkage of our PPA will be reflected in the revenue section. On the forex loss section, you'll still see the amount gross of it, no, so it's about roughly 360 million. But the net effect to the bottom line should be about 260. I hope that's clear, no? But just to for you to have an idea, that 261 million net exposure to the financials pertain only to the parent debt, no? Recall that we also have dollar debt at the wind project, at the Burgos wind level, and the way we did it is we tried to mimic the natural hedge that we have with the contract. Since the feed-in tariff will escalate 60% dollar, 40% peso, our debt in Burgos is also 60% dollar, 40% peso. That should mimic it, no? In terms of total absolute value, no, for Burgos, the total debt there dollar is about 190 million. And the dollar linkage on a per annum basis is about 40. So there's a net 140, 150 million of, shall we say, uncovered portion that will result, the peso depreciates to translation losses as well.
Right, sir. Got that. Very clear.
It appears there are no further questions at this time. I will now hand the call over to Mr. Velasco for any additional or closing remarks. Please go ahead, sir.
Okay. Thank you, everyone, for joining the call. If you have any other questions or need any further clarifications, please don't hesitate to contact us. No? And at the same time, we just want to remind everyone that the presentation will be posted in the Investor Relations page of our website shortly. The audio playback will also be posted in our website within 48 hours after the call. Thank you, everyone.
This concludes today's conference. Thank you, everyone, for your participation. You may now all disconnect.